Today, I'm excited to share a powerful and well-known ETF rotation strategy designed for monthly rebalancing. Whether you're an experienced algorithmic trader or just stepping into systematic strategies, this video is packed with insights and practical tips you don't want to miss. Let's dive in. The goal here is to create a strategy that's stable, low maintenance, and ideal for those who can't or don't want to trade daily, but still aim to outperform the market over the long term. I spent time studying multiple research papers and articles, pulling ideas and concepts from some of the best minds in the field. I'll include links to these resources in the description below, so you can explore the inspiration behind this strategy. First, let's talk about the foundation of this strategy. It's built using Norgate data. I use Platinum subscription, which provides highly reliable ETF symbols and data. If you're not familiar with Norgate, I'll link their platform below. It's essential for strategies like this. From these resources, I took a practical approach, integrating the most valuable elements to create a robust, real-world strategy, and to keep it accessible. The full code is available for download in a RealTest and a text file linked below. Key features. First, monthly rebalancing. This strikes the perfect balance between trading costs and performance. Daily rebalancing, for example, doesn't add significant value for ETFs due to their lower percentage moves, and costs can eat into profits. For those who want higher frequency strategies, then I leave my mean reversion strategy in the YouTube video description. Secondly, the portfolio includes 13 ETFs, chosen from research and resources, like Tradetronics' Substack articles, and we only hold ETFs trading above their 200-day moving average, and we sell ETFs that drop below it. This minimizes exposure to underperforming assets. Market regime filter. If the market signals a downtrend, the strategy avoids investments altogether. This layer of caution is vital during major crashes. To ensure the strategy mirrors real-world trading, I factored in transaction fees. $20 per trade to account for costs like ETF expense plus slippage. With a monthly rebalancing approach, these costs remain low, making the strategy efficient and practical for a wide range of traders. Now let's talk results. You can see how our approach consistently outperforms over the long term. Over the last 25 years, annualized return, ROR, 12%, maximum drawdown, negative 18%. Sharp ratio, 0.93. Maximum exposure, 100%. Even in challenging years like 2023, which ended at minus 2%, the strategy has proven resilient. For example, 2024 closed with a plus 27% gain, highlighting its ability to thrive in volatile conditions. I've provided the full strategy code in a RealTest and text file linked below. Whether you're using RealTest, Python, or AmiBroker, you can copy the code and run it with ease. If you have any questions about this strategy, send me an email. I'm always happy to help. And if you're interested in exploring mean reversion strategies or other high-frequency approaches, I've linked some of my favorites below as well.